There we are. We are live. Good morning, everyone.
Hello. How you guys doing?
Great. How are you?
Good.
We are back at doing our live stream broadcast here, and we've decided to sort of formalize our format a little bit and try to have it be a little more consistent for whoever decides to tune in and have it be reliable and predictable rather than just off the cuff all of the time. So for those who are tuning in and maybe hope to tune in the future, what we're going to try to do is do a quick, very brief update on the real estate market in Calgary and maybe across the country, depending on what's happening and what's interesting. We're going to talk about some topic of the day, something that is relevant. It might be a civic issue. It might be something interesting in real estate. It might be something that relates somehow to real estate in Calgary. And then we're going to finish it off with some sort of a personal segment, something that is just going on in our lives. So as far as the way it goes today, we're going to be talking about the market. The real estate issue we're going to talk about is just an interesting property that we've come across, and briefly some of the different ways you can buy property in Calgary. And then the personal segment today is going to be the recent listing of our brokerage, Real Broker, on the TSX, which is pretty exciting. So anyways, I'm going to kick it off with just a quick presentation on the market stats. We won't bore you, I promise. As far as, so these are the stats coming out of Canadian Real Estate Association. And this is really just the house price index broken up by the three different property types here: detached condos and detached townhomes and apartments. And the story here really is that we're relatively flat. We have come off a little bit, but compared to the news you might have heard about real estate in Canada, it's not doom and gloom here in Calgary. We are doing okay. When we move over to the stats from the Calgary Real Estate Board, again, really briefly, the story here is that inventory is trending up a little bit for all four of the property types that are listed here, which is detached, semi-detached, townhomes, and condos. But that when you look at both the stat here and the stat here, and I'm not, sorry guys, can you see my mouse when I'm doing that or no?
I can see the circles there, yeah.
The circles. Okay, so the two circles we have here, top right is the inventory. We're at about 2 months of inventory, which means that if the sales continued at the current rate and the listings came up, there were no new listings, we would be out of listings in 2 months. So 2 months generally for all four property types. That's apartments is a little bit down. That is semi-detached, about 2 months, and rows just about 2 months. Flipping back again, though, what's interesting as far as the national story versus what's happening here in Calgary is that year over year, our prices are up. For detached, we're still 15% up over last year. Apartments less so, but we are still up, which is a vastly different story than we've heard about apartments in the last number of years. Semi-detached up again, and townhomes up. So that's the quick market update. And Dan, I'll throw it to you for showing activity. And this is really just for our brokerage, but it is
we're getting very indicative of the market at large. We have a fairly sized brokerage here in Alberta. So just some quick numbers. You can see in the stats that Mike showed that the sales have been slowing a little bit, and pricing has been coming down just ever so slightly. Showing appointments for August for our brokerage, we have a total about 3,100. Moving into September, we had about 2,800, and then for October we had 2,300. So showings are down quite significantly over the summer, even, and going back to earlier this year, they would be much higher. So that's just a sign that the market is slowing, and I think that the showing numbers just are reflected in the number of sales and the pricing a little bit.
Yeah, I think overall the comment on the market is that we've got the headwind of what's happening nationally and in the economy, higher interest rates and all that. It's pretty hard to paddle uphill against that. But Calgary is the hot spot, I think, in the country, and people are moving here from not only Vancouver but Ontario. We hear anecdotally, we hear stories of that every day. And, just generally word around town, the tech market is on fire. There's just a lot of stuff going on in Calgary. It's pretty hot here. And the fact that we are holding our own against this headwind of interest rates and poor economy, it's pretty darn good. So we're pretty optimistic about Calgary. It's a good time to buy.
What one question for you guys. Has the with the interest rates rising, is that now making townhouses and apartments, things with condo fees more attractive?
I don't know that it's making them more attractive, but those townhouses and apartments still lie in the most affordable segment of the market. So I think that if there's an attraction there, it's to the value, rather than anything.
Yeah, that would have been my assumption as well. Yeah, or my thesis.
Yeah, I would second that, or third that, I suppose.
Yeah, I got it in before you did that. So I was having a great conversation with an accountant yesterday, and in his research, he's kind of discovered that the effect of the interest rate hikes they anticipate won't fully take effect for 12 to 18 months. And so, here we are, 8 months into the beginning of the rate hikes, and we're seeing the market slow down, and we might see more rate hikes come in December and January. So there might still be longer lingering effects of the interest rate hike, where honestly, in some markets maybe that's necessary, but this is as really one of the only tools that can be implemented in a short time frame by the Fed. It's a tough pill to swallow when we're in a market that doesn't need dampening.
Mm-hmm.
Which always seems to be the case for Calgary. Is we just start getting going, and then the federal landscape brings the hammer down.
Yeah. I had the question the other day about should I lock into or should I stay with a variable rate? What do you guys think? I'll tell you what my advice was, but what would you say if you had the opportunity to lock into a fixed term right now, which has gone up fairly high, I think in the 5-6% range?
To take my own advice, I would not. I'm still sitting with a floating rate. I think we heard from Nolan Mathias, who's a well-known mortgage broker, who said that to lock in the interest rate, the average interest rate on your floating has to be higher than the lock-in rate for double the amount of time for that to make sense. And it just has not, in my experience, been the case. I think that after our interest rate hikes later this year and early next year, that's going to probably be the peak, and then we're going to start to come down. So I haven't locked in, and I don't think it's wise when we're looking at a relatively brief period of interest rate hikes. If we were going to be looking at 5 or 10 years of them, then it might make sense.
Anyone else?
I'm currently locked in, but that's only because about a year and a half ago, we talked about, or rather we redid our mortgage, we re-upped, and we had the opportunity to lock in at 1.65. So we couldn't possibly do better than that. And while we might have been in the 1.4s on a variable rate, or 1.3s maybe, it just felt like too good. It was the closest thing to free money that I've ever even heard of, I think. So we locked in, and we're happy to have done so. But I think a sentiment as well is that if you are on a variable rate and you took advantage of the lower cost, you have to factor in how much time you spent at that lower cost and how long you need to pay the extra fees to catch up and then go past what the cost would have been.
You inherited good insight. Michael Boosley, do you have any thoughts on that?
Yeah, I agree. I mean, I guess historically it's a variable rate has always beaten a fixed rate. With that said, I think there are certain people, certain sort of personality types that, the certainty of having that fixed number is meaningful to them, so they just don't have to even think about it.
Yeah.
Or alternatively, just as Michael said, Michael Stanty said, like when the rates are so freaking low, you'd be almost foolish not to lock in like a 1.6 rate or 1.7 rate. So which is what we did actually. And so right now it's a good maneuver, but like historically it's not always the best maneuver.
You locked in too, then?
Yeah.
Good for you.
Yeah, we did.
Must be genetic then. Well, that insight, I guess.
Not
So
so
yeah, just to add to that, I think that what we didn't talk about or factor in was the cost of breaking the mortgage, payout penalties and so on. So if you have to sell, or if you're forced to sell, or whatever happens in the next little while, the cost of a payout penalty, which is usually a minimum 3 months interest, often balances any savings or offsets any savings. Insurance, when you're locking into a fixed rate, it's insurance, and insurance always costs. There's always a cost to insurance. So, if you can stomach risk, usually you have an advantage if you can stomach the risk. So I'll just add that to it. That's all I have to say about interest rates.
Cool.
Yeah. Yeah.
Mike,
And
what's that interesting property?
Yeah. So the way we came across this interesting property is Dan and I, in talking about the market earlier, we were just surveying the market to see what is the cheapest thing you could buy in Calgary right about now. And then it sparked the discussion briefly that there are so many different ways to buy real estate and so many sort of different types of real estate that you can buy. And so I'm going to share my screen really quickly here. And this is I would say, unconventional property type. In this case, you were buying half of an equity stake in a property that you will not move into, unless you want to move in with a guy, the current owner,
Can you
that doesn't plan to move out. And so, and also doesn't want to sell. It's a civil enforcement. So he's being forced to sell half of his share in the property
for 24,000? Is that what can you zoom in a bit? It's hard to read.
Oh
that.
yes, right here.
So it's like essentially the offer is $25,000. You can buy half a share interest in the ownership.
That's correct. Yeah.
So you get to live with this guy.
Live with a guy or not. I might suggest maybe avoiding that. But for $25,000, you can buy, according to the math that the listing agent has laid out here, you can buy half of an equity stake. And they assume that the property is worth about $350,000. And then there's a little over $200,000 on the mortgage. So if you had 25 kicking around and you bought that out, maybe if and when this guy ever sells and you enforce your interest on the title, then you could maybe be up, a few $1,000 or maybe more. Who knows?
So let me understand this. So you would take the place of his presumably ex-wife.
I would assume so.
Step into that position. He's not moving out of the house.
No, he's not going anywhere. And all the benefits of a legal union, none of the downside.
Wow, what an opportunity.
Yeah. So all that to say, though, that there are just so many different ways to acquire real estate. And if you had some money kicking around, it's a detached home in Temple. There will probably be some value there at some point down the road.
So it's reminiscent of we had the situation where we talked about that Freeman.
Yeah, that's right. Yeah, we had a listing some time ago now, maybe 5 years ago, and it was we had taken the listing on just after a very newsworthy event. I guess it was in the news, and there was a free man of the land or on the land who had been living in the property but had just left prior to our taking the listing to sell it. So,
and the whole premise of the Freemans, I mean, I don't know much about it, but I think the premise is that they don't abide by our laws; they just abide by natural law, and so you can give them. If the Landlord-Tenant Act says, you have 90 days notice to move out, they're just like, sorry, I don't recognize that law. And so I'm not going anywhere.
I think usually they follow maritime law or some other law that is whatever type of law happens to suit them.
Like the Magna Carta.
Yeah. Yeah. It's interesting. I've seen a few videos on YouTube of guys who it seems like most often the case they're being pulled over and they're not driving, they're traveling or something. In almost all cases, it seems to go poorly for them. I don't think I've seen one where the cop was like, "Oh, you're right."
I think they have a really loose understanding of the legal implications of what they're trying to do.
Keeps our job interesting anyway. So
yeah, sure does.
Thank you.
I just wanted to take a moment to acknowledge Kenneth Lynn there chiming in on that listing. Yeah, it's a unique one for sure. So thanks for watching.
Yeah.
Last up is, I guess it's my turn. I'm not going to share that photo. I just wanted to share a very unique experience that I got to partake in. Something that in the real estate sector is probably once in a lifetime. Twice in a lifetime, maybe for me, because I got to do it last year as well at the NASDAQ. But me, along with a number of our Alberta colleagues and the executive team with Real Broker, got to ring the opening bell at the Toronto Stock Exchange. And so we were given that opportunity because the Real Broker just this year graduated from the TSX Venture to the full-blown TSX. And that comes through their analysis or their analysts looking at the company and just ensuring that we have legs in the market. And so we got to graduate from the TSX Venture to the TSX. That happened in 2 years, and the average typically for companies is 4 years for that to happen. And really, I think about 5% of companies listed on the venture actually graduate to the full TSX. So really proud of what we are doing here in Alberta, across the country and across North America. I mentioned twice in a lifetime because we also got listed on the NASDAQ last year, and I was able to go and attend the closing bell ceremony there too. So, it's again, in real estate, it's a rare thing, and the company itself, it's being led by a number of kind of pretty visionary individuals, I think, that really understand that their client, their customer is real estate agents, not brokers selling franchises, and that their agents owe a duty of service to their clients. And so, just one of the few things that they have in the works is we're developing a consumer-facing app that is going to allow agents to show their customers, their clients, exactly where their transaction is in the whole process, because it can feel a little bit, for clients, I'm sure, like they're in the dark. Their agent has all this information and they're kind of being led down a path. And so it just will allow clients to see all that information. And, internally we call it like a Domino's pizza tracker, where you can see it's gone, order received, it's in the oven, it's being delivered or whatever. And so we're working on that in the background to have for our agents to provide to their clients. I think that's pretty cool.
So as an example of that, Daniel, I just interject a bit that we were talking to a lawyer the other day who was saying, wow, we'd love to be able to plug into that API and let the client know, for example, where it's at in terms of, conveyancing the deal. So, and that's where that's an advantage is usually clients will call us and say, yeah, we haven't heard from our lawyers, or we don't know where it's at. And the lawyers, of course, when you got 100 deals closing at the end of the month, in their defense, it's hard for them to kind of keep everyone in the loop. So they call them typically 10 days before, and before that, they're kind of in the dark. So this would allow them to know exactly what's expected of them, where the deal is in the process, and what to expect going forward. So it's really a visionary. I would agree.
It is, yeah. It's unique, absolutely unique in the real estate marketplace right now. And so it's a benefit for agents and benefit for clients. And
and just to speak about Real a little bit, we have so we launched Real in the first brokerage in Canada, and we're proud of that. We have the Alberta region, which Daniel is the broker of. We have, I believe, we're the fastest growing market in the entire system. Are we not?
I think, yeah, we were at one time. We might have slowed a little bit, but yeah, just a little bit off of one agent per day pace, and that's pretty phenomenal.
And then they opened in Ontario a couple of months ago, and we are now opening in British Columbia, launching in British Columbia sometime near the end of November. And so that's a great opportunity for agents in November that operate in BC to get involved in the most innovative brokerage out there right now. So if there's any brokers I should say agents in British Columbia that are interested in it, reach out to us, and we can talk to you about that. Open the door.
Yeah. So, I mean, there's so much more to Real Broker that we haven't touched on today. So happy to chat more if anybody's got questions.
Absolutely.
Great. Okay. Well, thanks everyone. I think we're at our anticipated time limit here, just a little over 20 minutes, and let everyone get back to their day. And thanks to the three of you for great chat.
Thanks for hopping on.
Okay.
Awesome.
Have a great day.
Yeah. Thanks, guys. See ya.
Bye-bye.